Yo, Bass, Conscious Crypto. I'm really just doing this video for my mentees to explain essentially the material that I'm going to be handing them. This one can be a touch complicated, and so I encourage people to eliminate what they don't need and just really simplify it for them. So, like I'll give examples of that right off the bat. If you know anything about using spreadsheets, like you can just fill that black, right? So you don't even have to like know how much percentage you're adding. You just know that for your first entry of your total 5% capital exposure, you would be putting down $7,500. All right. So let's start at the beginning, right? The simple part of this is that the here I just want to highlight news. Like, what is a news priority? So when it comes to bank rates, interest rates, that is going to be the most important news. Then inflation data is going to be the second most important news. Then employment and then GDP, and that is just a measure of volatility. So when you have rates and inflation coming out on the same day, expect the most volatility you're going to see, in assets that are affected by that in that year or during that quarter. So the really only things that you need to change on this is here, your total balance. And if you have two accounts, you can also just like keep it really simple over here and just be like, oh, okay, like I have a funded account, for example, and it's $200,000. And so I keep it really simple and I just always risk 1%. And so you just know there's two. And then let's say you start making money and now it becomes 208. Now you know what you're risking here. You're risking two. For the most part, until you start like adding like $50,000 to it, you really don't have to. It's just good to get comfortable with a lot size and run with it and get profitable with it, and then you can look to size up. So anyways, that's just there on the side in case you wanted an extra simple risk approach and just a risk calculator to say, hey, I'm risking 1%. Now over here is a little more technical in the sense that, like, just so you know, it's like if you want it this, the rest of the spreadsheet is controlled starting from the top. So let's say you have a $300,000 account. Every number down here is about to change, okay? Every number in this white and then every number in this slight yellow here is going to change. So boom. Now you know immediately like what 0.5% risk is, what 1.5% risk is, what 2.5% risk is, and then going down a little lower, I'll explain the rest, everything down. So these are my top 3 strategies, and divergence is probably something everybody can understand. 3 hits of divergence, bearish, bullish, whatever, is usually a sign of a counter move, and I love those counter moves. I love getting in at a good entry and then just watching the market fall or rise away from that entry and then sitting back and swinging that trade. So that's why I really like this one, and that's a good example to use. Another one is just the TDI trend, or like you call it the RSI trend. The RSI trend is just finding trend lines on the RSI. Now, if I find a trend line on the RSI 1 day, 5 day, let's see, for example, boom. So this one was a 5-day trend of actually bearish divergence on the RSI, and so I will show my entry in a little tighter, and I got in kind of early. It's all right though. So I got in kind of early here. I got in early, like literally right here as it began to uptick, and so I floated in drawdown. I was asleep for when I was in profit, floated back into drawdown, and then the news came out, and I'll show that. And this is just, I find this fascinating, right? Like, news came out, CHF last night, and they dropped their rate, which was bad for their currency. People are earning less yield by holding the Swiss franc. So that dropped the price, and it was setting up to correct. Like, that's exactly what this was setting up into the news. As the news dropped, bloop, big volatility. But this has been in a crazy uptrend, so I don't expect it to fall easily. And it's performing really well against everything. The dollar, look at that, it's been in a downtrend. And then the euro, it's been in a downtrend. So it's been performing well. This could be a turning point, but we'll have to wait and see. Anyways, going back to it, to keep it simple, you can always fast forward through this or play it on 2x until you find the information you need. So this is a triple entry system. These are my strategies. And so for this one, when I see it on like a daily or a 5-day, I risk 5%. Like, I'm just incredibly confident by that metric. If I begin to see it on a lower time frame as well, like a 4-hour, I might even add more, right? But I like to leave multiple entries, like up to 5 entries available to me. So like if it's a 5% total capital exposure of my account, 5% is $15,000 of a $300,000 account, meaning my first entry will be worth about $9,000. Get this back to the color I want. The second entry would be worth about $3,000, and then my third entry would be worth another $3,000. Now, for me, the third entry is an add. So on my personal spreadsheet, this says add, this says at signal, and then the other one here says at retest, which means like retest the high, retest the low. It's basically, I'm a discretionary trader, so I try to provide something concrete for myself, especially when it comes to risk management. But when it comes to the subjective entering and exiting of my trades, I create structure to inform my decisions, but ultimately only the risk management numbers is the only manual aspect of my trading. So, and this just allows me to take losses and then stay in the game. Take losses, stay in the game, because it's all probability. So I just got to play the numbers in a way that maintains my will and my resources to play, right? My emotional capital, my mental capital, my physical capital, as well as my financial capital. Because when you take a big loss and you take a bigger loss than you needed to take, it hits on the mental, it hits on the emotional capital, and it drains you for the next trade. More so than your financial capital. But then it comes right back around, and what happens? You're losing more money. So that's how I look at things. I talk about that all the time, different videos. So that would be a perfect example. One day, if I see it on a 1 hour and I see a trend line and it has like 3 hits, and I'm like, oh, okay, we got a trend line going here, then I'm entering with like 1%, right? I don't need to risk as much it's on a lower time frame. But they're pretty reliable, and usually I see some sort of combination. So that's what I wanted to show here. And then there's some so this is 3 entries, and if you were to change anything here, just change this, right? Just change, maybe you don't trade on a daily and you're like, yo, this is my 4-hour, and I encourage higher time frames for sure. This is my 4-hour, and on a 4-hour I only changed 3. Now watch all the numbers here, they're about to change. Boom. So all of this changes. And again, you don't need to see the percentages. That might even be confusing. Feel free to block them out. But they're there in a necessary way so that these can be calculated using that cell as well as the total balance cell. And then there is equations in here that are resourcing this cell. So really, again, the reason I'm making this video is just to show you what to change. The only things you should ever be touching is this balance, changing this to like, oh, I have a gap up. Let's say I'm not an equities trader, but like, oh, gap up on open New York recovery. And your back testing says that that's something that you 67% of the time fills within the first half of that trading day. Like, okay, so that's what your strategy is. It's a gap up on open New York recovery. So gaps up, and then it comes back down and fills that gap, and that's your trade. All right. That's the only other thing you change, and then here you can just delete whether counter or continuation. Is it a counter? It's in this case the gap up, could be trend continuation, and so if you're shorting a trend continuation, then you're actually in a counter trade. So delete what you don't want, right, and keep what you do want. So that's simple. Boom. Bring that back to the daily. All right, now I'm going to show dual entry. Same thing, super simple. The only difference here is that for this strategy down here, the check and go is like a retest of, in an uptrend or a downtrend, it's a retest of the moving averages. And let's see if I can show a beautiful one on Bitcoin. Yeah, Bitcoin had, oh, there was one right there. Shoot. All right, so here's a 4 hour. Let's go to a 15-minute. All right, beautiful. All right. So here we go. Here's a retest vector reject at the open of New York in a confirmed downtrend, right? Lower highs, lower lows, lower highs, lower lows. And then boom, at the open of New York, it tests the 200 EMA, the white line, mustard drops, okay? Quick little entry, quick little, take profit. Guess what? It sets up for the same shit the very next day. Checks the 200, drops. So according to my risk hit list, I'm seeing that on the 15-minute chart, and I should say 50, as you can see in my notes there, 50. So this is a 200 EMA check with vectors and the session. Like, that is exactly the trade setup that I'm looking for, and that's a 1% entry. Now I have a bigger account than that, so let's say 250,000, and I'm risking $2,500. That's a pretty sizable risk, right? But again, look how that played out 2 times in a row. And let's short. So the tough part about this is I'd probably wait for this vector reject, and I'd set my entry like here, or my invalidation here. My true invalidation is a close above here. So I'm subjectively entering with this position size of 1.77 Bitcoin, and that's would be, nope, if I'm risking $2,500. There we go. So I'm actually 4.4 Bitcoin, which is pretty big. I'd be just as comfortable saying, hey, let's do 2.5. I don't think it'll hit this, but just in case there's a volatility spike, there you go. Let's show one more. So 800, boom. This time during New York, it comes up, tests the 800, gets a rejection, has a vector candle as well rejection, which just means high transaction volume. Or it's like how many transactions happen within that candle. So it's a little less about volume, and it's more just about the number of transactions. Go back to my hit list, and that's an 800 2.5, right? 2.5, which is $6,250 of risk. So I can click in here, take the short. Say I get an entry right around here. Just gonna place it above the high. Look at that, 6-to-1 risk to reward ratio. That's a lot of risk right there, right? It's a lot of risk. So that's 17 Bitcoin. I don't even know if I can leverage up 17 Bitcoin on my account. But at whatever, this is a really interesting level anyways for it to return from. And there you go. And so as a discretionary trader, maybe I'm not entirely confident about that happening basically towards 3 o'clock on New York time. So maybe I'm going with 1% instead, and that's up to me. All right, cool. So yeah, that's all I wanted to say about that. Is that again, this is just one other example of like here's a double entry. I can enter with um, one position size and then the other half of the position size. So one half of the position size, the other half of the position size. And let's see, I don't think I really take 50 EMA rejections on a 15-minute chart. But here's an example of one, right? It does respect, and this is like 3 hits as well. Doesn't break, drops. Um, yeah, not huge on it, but it definitely works, especially if you're a scalper. All right. So with that said, that is the dual entry, and then of course there's the single entry to keep it simple for people. And the whole point of this exercise is simply to take one more decision out of your decision making process when trading, right? So the reason I date swing trade is because I don't trust myself with multiple decisions a day. I get decision fatigue. I'm human. I can't be a robot, an AI algorithm that's trading the markets nonstop in a high frequency trading pattern. Like I can't do that, and I can't stay up for 24 hours straight and still be reliable. And I want to live a life, man. I want to be free to go live my life and live my best life. So I swing trade, and that essentially allows me to make fewer decisions about what to do on my trades. And this is a perfect way to eliminate the decisions, plus remind me of what I'm looking for. Like, oh yeah, TDI trend. Let's go check the charts for TDI trend. Oh, 3 hits. Let me go check the charts for 3 hits. The check and go. Like I missed those 2 check and go trades, which would have been a great trading week just to hit those 2 check and goes on Bitcoin. Um, right here, boom, check and go, opening of New York, big wick, recovers some of that liquidity, then drops. And it's like those should be easy trades for me, but I missed those. Must have been trading something else, or I just flat out missed them. And I'm kind of kicking myself a little bit for missing these. And again, like I actually remember missing these, and this was the second opportunity to get in there. So you'll notice like lower highs, higher lows. People are afraid of crypto, but the reality of it is if you play it with low leverage and wide stops, it's viable. Like see this drop, boom, it comes up, sure. And this was the news CPI print, and then the Fed held the rates, but it came up, it didn't break, and I manipulated the shit out of this. This is what got me on the leaderboard at FXX. This and the USD JPY, trading the same stuff, news volatility. And the reason was, it was like, this dropped. Actually, I was in that trade too. Then this trade, that was a personal account, I think. I can't remember if it was both. But it didn't break this high. Like, that's the thing, is people might see this candle and be like, oh, I need to get in on this. And if you're a scalper and you grab that and that's your day, great. But to me, I'm like, nah, there's something going on here. It brought it up for the open of New York session, and it could not break these highs. My invalidation was above these highs, right here, and it couldn't do it. And then here's a second example of that. Boom, right there, could not break. Look at my line, could not break, kept dropping. So it's very important, these things right here. It's very important. Did I end up taking that trade? Yeah, I don't think I did end up taking this trade. I did take a short on ETH that captured this move, and the question is, I think it might be turning. I'm kind of feeling the exhaustion around the shorting. I don't necessarily want to keep shorting, but there is hidden bearish divergence, but there's also a lot of bullish divergence on the 1 hour and the 4 hour, to where it's like, okay, like this market is slowing down and shorts not really the play anymore for me. Doesn't mean it can't go lower. I don't know what's going to happen next. I'm just saying I'm getting signals that are telling me to be going long, so I can't trust my shorts. And the market's all about trust. Trading is all about trust. Trust in yourself, being able to trust your broker, right? The platform, trust the data feed. Like, we have to have so much trust in life, but also in trading. This was a longer video than intended. Again, feel free to listen to all these like videos on 2x. I've listened to all my videos on 2x. I feel like I sound better. Sound really intelligent because I feel like I'm talking like really quick and everybody can't even open it. So, all right, I'll leave it at that. Cheers. Have a good day. Conch Crypto. What's the point of making major gains if we lose it all in the process? Lose ourselves in the process. Stop.